Over the past 40 days, I have accumulated more than $1,700 worth of crypto in a completely passive way. In this video, I'm going to show you the bot that made it possible. If you've been looking for a way to passively earn in any market condition, then this video is for you. But before we dive into the details, let me tell you the story of how this bot was born. In 2021, I sold my first business, and for the first time, I had money to invest. This is when I came across DCA bots, and I got hooked on how easy it was to make money. Keep in mind that this was September 2021, in the middle of a bull run, so no matter what you bought, you could have made money. But of course, November 2021 came along, and it brought two things: Bitcoin all-time high at the time, and the beginning of a bear market for which I was completely unprepared.
No, God!
Long story short, I lost a lot of money and I got really depressed. But despite the loss, I still believe in crypto trading bots. Over the next few weeks, I spent a lot of time thinking how to build a passive strategy that will allow me to profit in any market condition, no matter what the price is. At the time, I was using a few bot platforms. I kept sending them my future requests to implement my strategy ideas, but they never even heard me. The truth is, the bigger the platform, the slower it innovates. I knew that if I wanted to be part of something truly innovative, I would need a different approach. It was then that I decided to start a platform built around community, where everyone can be heard and can contribute with their ideas. And that's how Gainium was born. It turns out that a great idea was presented shortly after we started, and it was the answer to the long-term passive strategy that I wanted to build, to combine grid and DCA strategies into one. You see, I've used both kind of strategies for years. Each have their advantages and their disadvantages, but when you combine both of them together, they work synergistically and something magical happens. But before we dive in, let's examine each one independently first. Let's start with the grid bots. The great thing about the grid bots is that you don't need to predict short-term price movement. Grid bots place a series of orders above and under the current price, and whether the price goes up or it goes down in the short term, it doesn't really matter, as long as it stays within the grid range. They produce a smaller but consistent profit over time, and if your grid range is wide enough, then it's truly set and forget. Now let's look at the cons. The biggest issue with the grid bots is that when you start the grid, you need to buy base to set up all the sell orders in the grid. In other words, you have to make a lump sum investment at the beginning when you start the grid. And the problem of this is timing. If you're unlucky and the price goes down after you start the grid bot, you could be holding a negative investment for a while. The silver line though is that as long as the price stays within the grid range, you could be making small but consistent profit. So at some point you might be able to turn around the investment, but it could take a long time. The other issue with grid bots is that they lack strategy automation and customization. So as soon as the price is out of the grid range, you will have to manually intervene. Now let's talk about the dollar cost average or DCA bots. The good thing about the DCA bots is that timing is not as important. If you start the bot and the price goes against you, then the bot will buy more of that asset at better prices and it will average down the acquisition price, which is a main strength. Another good point is that they have a lot of strategy customization options like enter with indicators, exit with indicators, webhooks, and more. So it's really easy to make a sophisticated strategy that can be automated. On the flip side, they're more inconsistent with profit generation, as deal can get stuck in a loss for a long time, aka redbacks. So you have to be careful, and they definitely require more oversight and manual intervention. Now imagine, wouldn't it be great if we could combine the pros of the DCA and the grid bots into one? Well, you don't have to imagine because we made it possible, and the answer is the combo bot. In essence, the combo bot trades like a grid, so it doesn't need to predict price movements, it's completely passive, and it can produce consistent income over time. But it also uses DCA to build the grid slowly at different steps and to average down the acquisition price whenever possible. So that means that timing is less important. And that's not all. The combo bot has all the strategy customization options of the DCA bots, like entry and exit with indicators, webhooks, take profit, stop loss, and much more. The combo bot is like a grid bot but on steroids. Yeah! Are you excited yet? Now let's move to my computer and learn how the combo bot works. Okay, here we are in the new combo page, which you can find from the menu combo bots and new. And before diving into the settings of the combo bot, I think it will be useful to understand a few concepts that are exclusive to the combo bot. And the most important concept we need to understand is a mini grid. The mini grid is a small grid that the combo bot will make each time it fills an order. So for example, we have the start order here, which is also called the base order. And when this order is filled, it will create a mini grid on top, which in this case will be the base mini grid. As long as the price stays within the range of the base mini grid, it will keep on trading like a grid bot. However, if the price goes down and then exit underneath, here in this space you can see these gray lines, which means they are not yet on the exchange. These gray lines means there will be grid lines that will be sent later. First, the price needs to reach the DCA order, and when the DCA order is filled, then it will create the DCA mini grid, and in this case it will make all these lines, grid lines, sell orders, and it does expand the grid down this way. And if the price goes down and hits the next DCA order, then it will create another mini grid from here until here with the funds that it was purchased on this DCA order, and so on and so forth until it reaches the last DCA order, in which case we will have completely built the grid this way. Now let's talk about the three characteristics of the mini grid. The first one is a mini grid height, or how much price deviation do they cover. The second one is the number of grid lines inside the mini grid. And the third one is how much funds does the mini grid need in order to run. And these three characteristics are related because the taller the mini grid, the more grid lines we can fit inside. But the more grid lines we have inside, the more funds we need to put inside each mini grid. Now let's talk about closing combo bot deals. A combo bot deal can close in one of two ways: by exiting the grid, exiting the top part of the grid if we're talking about a long combo bot, or the lower part of the grid if we're talking about a short combo bot, or it can close by taking profit or stop loss, but those are based on the deal value. But what's important to understand is that a combo mini grid will always close when the price exits the top part in case of the long, or the lower part in case of a short mini grid. And to understand this better, I think we could run a backtest to see the behavior on a real deal. And let's run a backtest. Let's just see and run this one. Let's give it a little bit more time. Let's choose that. And let's see the result. Okay, so we have a few deals in profit. And if we go to the deal list, you will see that the P&L is actually variable. It depends. It's not always the same. And the reason for that is because this bot doesn't have any take profit or stop loss. You see, it's disabled here, take profit and stop loss. So the only way that the deal can close is by exiting the mini grid. And we can check one of them, for example, this one. And let's see the behavior. In this case, it opened the base mini grid, and you can see the cell lines of this mini grid here. It went a little bit under, but it didn't touch this DCA mini grid, so it didn't open this grid here. So it just continued under and then stayed on range of the base mini grid, started the price with volatility up and down, accumulated profit, and boom, at the end, it went over the top of the mini grid. So the deal had to close because it already went over the top. And we accumulated 5.18% in profit until the moment it closed. This one accumulated more because presumably it had a lot more volatility. And as you can see, we started here, started trading, and then it almost went up until the top of the grid, but it didn't. So the deal didn't close. In fact, it went down shortly after and it started opening more mini grids on the way down. But then from here, it went quickly, it went up. Let's look a bit more, zoom in. So you can see what's happening here. It went down, it went up. So it opened the mini grid, but it closed it quite fast. And then kept on trading. And then it hit the top of this mini grid, and therefore this mini grid was also closed. And then keep on trading more. And then at the end, it closed by exiting the grid on the top, and it accumulated 12% of profit on this deal. And you can see this one was quite low profit, 2.81%. And the reason for that would be because it went up, straight up, and there wasn't much volatility inside. It was just practically straight to the top of the grid range. Now let's see what happens when we activate a take profit. And to understand what happens, let's run the same backtest and see what's the behavior of the deal. And we have left the default setting of take profit 5%. And you can see here in the results that 3 of them close at 5%, but another 3 of them close under 5%. And let's see why that happens. On the deal list, we're gonna click on one of them, for example, this one. And here we can see that this trade was open here, and the price quickly went to the top of the grid and it closed the grid. And even though we have left everything default, which means that this mini grid height is 5% and the take profit is also 5%, some people erroneously think that when the price exits at the top of the grid, because the mini grid height is 5%, then you should be 5% in profit. But that's not the case, because this is a grid trading, and there are many sell lines before reaching the top of the grid, which means that here you will be selling at 1%. Here you buy again, then you sell again 1%, then you sell at 2%. In this case, you didn't buy anymore, but you sold at 3%, 4%, and then 5%. So by the time you reach the top, you don't have 5%, you have actually less, because you already sold some of it on the way up. Now let's look at a deal that closed at 5%, for example, this one. And let's zoom out a little bit. And you can see that in this case, the deal started here and started trading. And even though it never reached the top of the grid, it already closed with 5% in profit about here. And the reason is they are based on the deal value and they don't depend on a specific price. So let me explain this. Imagine that we start this deal here, and on the base order we have $100, and then each DCA will be also $100. And we set a take profit of 5%. So when the deal starts and the base order is filled, we have invested $100 so far on this deal. So a 5% of $100 will be $5. Now, when does a bot reach $5? At what price? It depends. And it depends on the volatility, because remember, it's going to start selling as it goes up, and it's going to start buying and it goes down, and it's going to be profiting on those grid differences. So it may start trading, and in this case, but the time that it reached a 5% was when it reaches at this point. And it's not 5% from when the order was started. It was just when it accumulated 5% relative to the initial funds that we have on the deal. And that is actually one of the strengths of the combo bot, that it doesn't depend on any specific price to close the deal. It just depends on how much profit you've managed to accumulate during the grid trading. So it can close at any point in the grid, even if the price went down and stayed down for a while. As long as it keeps trading during in that grid range, it will keep on accumulating profit, and eventually it can close with a take profit. Now, I want to mention that taking profit in the combo bot is different from taking profit on the DCA bot. In the DCA bot, it's a little bit more straightforward, because you have your base order, you have your DCAs, and you have only one sell order. And that sell order, for the most part, sometimes is even sent in advance as a limit order to the exchange. So the execution is very fast. Now in the combo bot is different because you are basically trading inside a grid, and you have sell orders above the price and you have buy orders under the price. So even if you're accumulating profit and all these orders, remember they are limit orders, right? They are actually on the exchange. So if you reach your target take profit, say 5%, and you're here, the bot will need to sell the remainder of the base. But in order to sell that base, first you need to cancel the grid because you still have that base on limit orders above the price. So first needs to cancel the whole grid. Then it needs to make sure that there is no base on limit orders. So it needs to wait for the exchange response. And then it will issue a market order to sell everything. So it takes a little bit longer than a typical DCA bot if you tried them before. This process is usually less than 10 seconds, I will say between 5 and 10, but you should take that into account. And now that you're familiar with the behavior of the combo bot, we can check the settings. So starting with the basic settings, nothing special here. Then we go to strategy and you will see that it's the same as a grid bot and the DCA bot. You can go long or short, and you can profit in base or you can profit in quote. So that is the same. Now we get to an interesting part, which is the deal start condition. And this is exactly the same as the DCA bot. So all the options of as soon as possible, you can start manual if you want to tell the bot when to start the trade. You can use a time base, you can use webhooks, or you can use technical indicators, and you can start your grids based on those technical indicators. So this will give a lot of flexibility for when to start the grid, and I think this is one of the great additions to the combo bot. Let's leave this ASAP for now. And we also have some filters for when to start or not to start the deal. We have static price filters. We can tell the bot, for example, in Bitcoin, do not trade if it's under 50K or if it's over 70K. We can use dynamic price filters, and this is one of the recent additions, which is looking at the previous deal. And for example, you can say, let's not open a new trade unless we are, say, 10% from the entry price. So if this is a long bot, it will be 10% under the entry price of the previous deal. So this way you can avoid overlapping deals on the same price zones. And then we have the cooldown, where you can ask the bot to pause even either after starting a deal or after closing one. Okay, and now we get to the base mini grid settings, and this is specific for the combo bot. If you remember, the base mini grid is the very first grid the combo bot will open at the start, and this mini grid can be different from the rest. And there are some advantages to that, because you could create a deal where you have a very tall base mini grid and then you have a lot of sell orders, and you could have different DCA order settings. And you can see here how these settings affect the shape here. So for example, if on the top price, we instead of 5%, which is the default and is the same default as a DCA, so now all of them are the same height, you can say the top price for the base mini grid can be 15%. And now the base mini grid is 3 times as tall as the DCA orders, DCA mini grids. But of course, we haven't changed the number of mini grid levels. So if we put 15 here, now we will have the same spacing on the grids as the DCA mini grids. But you will see now that it's telling you that the minimum budget is now 75. And that is because, as we mentioned before, the more mini grid levels you have, the more mini grid amount of funds you need to put into it because of the exchange minimum order. So we will have to put at least 75 for the bot to proceed. And we can also use a fixed amount of currency, USDT in this case, but we could use also percentage of total or free quote. And in this case, we could compound with each subsequent deal this way. Okay, and now we get to the DCA mini-grid section. And this section shares a lot of similarities with the DCA bots in the way that the DCA orders are spaced and scaled, as you will see in a minute. But you also have a few extra settings there specific for the combo bot. So first of all, we have the number of DCA orders, and it's 5 in this case, is the default. If we enable the smart orders, it's the same as in the DCA bot, that only in this case we have enable 1, so only 1 will be sent to exchange as a limit order, and that way we prevent locking of the funds until we need them. For now, I'm gonna disable this, so you can see that all of them are in color. It means all of them will be sent to exchange as soon as the bot starts. And then we have the order step that will be the same as a Minigrid base Minigrid top level. So as we increase the order step, we are separating more the DCA orders, and therefore we are increasing the height of the Minigrid, the DCA Minigrids. As you can see there, they are extending, and then we can also change the number of DCA Minigrid levels. So if we were to have, for example, 10, and then we can have also 10, although in this case we need also to increase. There you go. And you can see that we have double the size from the default. And this is another recent addition, the active Minigrids. And this means that when the bot starts, it will, instead of only placing the DCA order and waiting for the price to come back to this order, it will right away make this Minigrid active with buy orders. So that way, when the deal starts, you will have already the sell orders and the buy orders, the same you will have on a normal grid bot. And you can see that when you enable this, these orders already turn into green, which means it will be sent to exchange. And if you were to put 2 active Minigrids, it means all these 2 ones will be sent to exchange as limit orders. You can backtest with and without active Minigrids, and you can see the result on profitability based on that. So I'm going to disable for now. And then the last 2 settings here are the step scale and the volume scale, where we can geometrically scale our DCA orders, and the result of this will be a grid bot that is asymmetrical. So as you can see, with a 1.5 1.5 step scale, you can see that the grid spacing gets proportionally bigger as the price goes down. And there are some advantages to do that. You can always backtest and see what's the result of that. And the same you can do for the funds on the Minigrid, and you can scale them this way. And then we have the take profit and the stop loss. And you can see that the first option is to close with a market or a limit order, but don't get confused, because even if you choose limit order, it doesn't mean that your take profit is gonna be a limit order somewhere here on the grid while the grid is trading. Remember that the combo bot needs to cancel the grid before it can even send the order for take profit. So the difference between these two is that once the grid is canceled and the bot wants to send the TP order, it can send it as a limit order or as a market order. And I usually use market, so it will execute that order as fast as possible. And then here we can choose how much take profit do you want on the deals. And these settings is going to allow you to base the take profit either on the used DCA or the max DCA. And let me explain that for a minute. So imagine that we have, and for now, let's just disable the scaling. And we'll make it a bit maybe easier to see. And here, imagine that we have a 5% take profit. And to make the calculations easier, let's assume that we have $100 on the base order and $100 for each of the DCA orders. So we have set up our take profit to 5%, and we're gonna base it on the used DCA. When the deal starts, it will use $100 for the base order, and our take profit will now be 5% of $100, which means $5. So if the deal starts trading and it starts generating profit around here, and at some point reach $5 in profit, then the deal will close. However, if the price goes down and it hit one of the DCA levels, let's say that it hits this one, and now we have $100 invested from the base order plus another $100 from the DCA orders, we have a total of $200. 5% profit that we expect on $200 is $10. So if the deal keeps on trading and at some point it accumulates $10, then the deal will be closed, and so on and so forth. Each time it hits a new DCA orders, the take profit will change, and it needs to be 10% of what money we have invested so far in this deal. However, if we base it on the max DCA, and we have, like in this case, one start order and then 5 DCA orders, that would be $600 total invested. If we put it on this setting, it means that it will always need 5% of $600, no matter if it used only the base order or if it used whatever number of DCA orders. It's always looking at the same profit per deal. All right, so now you're familiar with the concepts and how the combo bot operates. So the next logical question would be, when should you use a combo bot? And more specifically, when should you use a combo versus a DCA or a grid bot? And to answer that question, I would like to run some backtest. Now, keep in mind that we will not be able to compare the grid bot to the combo bot because the grid bot uses static ranges. And so much about the profitability, it depends on how you define those ranges. However, we could compare the combo bot and the DCA bot as they both operate on dynamic ranges or deviations. And so they will be a more fair comparison. And I would like to compare these two bots on 3 different market conditions: on a bear market, on a range market, and on a bull market. And we can start with the bear market. And I have selected here a configuration where we can test from the November 2021 all the way down and see how this bot will have performed. And I have selected a 75% deviation and a 1% take profit. It's quite convenient that the price is right now more or less where it was right here. So you can see that the 75% deviation actually does cover all the drop. And let's go through the settings. We have a long bot that's profiting in USDT. We're using just small orders. It's ASIP, and we have a 1% take profit, and the DCA is 15 DCA that they are 5% spaced apart, and there's volume scale and step scale is just 1. So we have a 75% deviation and just over 400 USDT per deal. Now let's run this configuration during this period of time and let's see what the results are. Okay, we have 1 minute, and from the 11th of November until the 11th of September 2023. And let's see. Okay, and we have the result. The bot managed to close 1 deal. And the reason why I chose this period of time is because it's exactly the time that it would have taken you to close the deal if you had started the bot in the November 2021 peak. So 728 days. And so we can now compare the combo bot performance with similar settings on the same period. Let's go over the combo bot. And we also have a 75% deviation and a 1% take profit. And this is a long bot, profit in USDT. It's also ASIP. And we also have 25 USDT. We have 15 DCA orders, and they are 5% space apart. And they have 5 mini-grids inside. So we are covering 75 deviation, just like our DCA bot. And we have slightly more per deal due to the grids. We have 460 USDT per deal. Now we can run this on the same time period from 11th of November until the 9th of, until the 11th of September. And let's see what we get. Beautiful. It looks like the combo bot managed to close a few deals on the same period. We can actually take a screenshot here and see both of them, one under the other. Okay. So yeah, we can see that we have a 1% return on the DCA bot because it only managed to close that one deal. And the equity drawdown was minus 55.57. And on the combo bot, we have a 6% return. And mind you, neither of them is great, but you have to consider that that period was a really, really harsh bear market. So, I mean, the fact that both of them came in profit it's already good enough. And so the combo bot managed to have a much lesser equity drawdown, minus 35%. And also the deal duration, the max deal duration was greatly reduced. So now let's take a look at what actually happened. And let's go to the deal list and check what went down. So we started here, and then the price started to go down. We started filling all the DCA orders. We're lowering the average price, just as you will expect with the DCA bot. But look that even we filled the last one at the very bottom, the price to take profit was still quite high from the point of the bottom of the bear market. So it took a while more to actually get to that price so we can close the deal. Now on the combo bot, if we go to the deal list and we take by start time and select the first one, we can see that we managed to close it earlier because the combo bot was actually profiting all along this area, unlike the DCA bot that was stuck because the price never went high enough so that it could close this one deal. And so we have a 1% take profit, which took a while to reach because there was a steep decline. So all the base that we bought, it was declining on value, and it was making it harder and harder for the deal to reach the 1%. But at some point, it did reach 1%, and it was because there was some sort of, I don't know if you can call this a dead cat bounce or whatever, but the point is that at some point, the value of the deal was 1%, and the bot could close this deal and start a new grid again, which would overall, it meant that you will have a lot less drawdown on your equity and you will have much better stats. Okay, now we can compare the combo and the DCA bot on a range market. I have pulled up the Bitcoin chart right here, and I would say the closest low volatility period we had is probably somewhere here from around the 15th of June up until maybe the 15th of March or so. So this looks like in comparison, a lot less volatile, and there was maybe we could cover with a 30% deviation. We could cover this range. So let's set up our bots and let's backtest. Let's start with the trading bot, and all we're gonna do is change the number of DCA orders. Everything else stays the same, and we're gonna change it to 6. So we have a 30% deviation. And on the backtest, I've already made the period from the 15th of June 2022 to the 15th of March 2023. And let's test. Okay, and we have a 22% result. And let's do the exact same thing on the combo bot. We're just going to change the number of DCA orders to 6. And we're gonna leave everything else the same. And we're gonna backtest on the same period and start. And the performance is quite similar. We have an almost 21% net result. And let's check actually side by side. And there you have. So 22.4 versus 21, and the drawdown is minus 10.3 versus minus 9.8. So it's almost identical, I would say, quite similar one to another. However, the combo bot has some options, and this is one trick I want to show you that the DCA doesn't have. And you will see that for this particular period, if you disable the take profit, you will get a much better performance. That's not something you can do on the DCA, of course, because on the DCA you need to have a take profit. But since the combo bot is going to close the deal anyway, as soon as the price leaves the grid, then you don't actually need to set a take profit. And you will see what happens when we deactivate it. And you can see that the profitability doubled. We have a lot less deals, but they have huge percentage of profit. And we also have a lot more equity drawdown, but still is less than 20%, so it's not too bad. We can now check that compared to the DCA bot is quite differently. But of course, now we're cherry picking results. We're not really comparing apples to apples, but I'm just showing you this so that when you have a strategy in mind and a coin in mind, it's always worth checking the different options that the DCA bots can offer you and the different options that the combo bot can offer you. And you just might find something that works really well in one or another. And for the last test, I would like to compare them on a bull market. And I've selected from the bottom here up until the 24th of March, which is when we have our peak. So let's test how they will have performed. And let's do the DCA bot. And there is very little, maybe, let's see if, I think maybe if we put 3, it should be about enough. We're gonna do 3 DCA orders. And let's see what we get from the 24th of November to the 24th of March. Okay, and the DCA bot managed to get a 68.37. That's not too bad. Now we're gonna test the same for the combo bot, and we're gonna enable back the take profit so we can make a fair comparison. And let's have again 3 DCA orders, and we're gonna back test on the same period. And there you go, 68.2%, and that's quite similar to what we got on the DCA bot. Let's check side by side. Yep, I mean almost identical. It seems that when you have both the take profit around the same target, the DCA bot gets a little bit more net profit and a little bit more drawdown, and the combo bot does slightly less net profit and less drawdown. But again, if we disable the take profit from the combo bot, you will see that it changes the result. And let's see on the same period. Now you can see that with that little change, we got a better result. Yeah. Reduce the drawdown and increase the profitability a little bit. Of course, those results are not optimized. The point of this exercise is to show you how the bot will perform on the same period with similar settings. There's a lot that we have not covered on this video, like the deal start conditions, the step scale, the volume scale, and other settings. This video is just meant to give you an introduction to the combo, but we will cover all those options and new strategies in future videos. I hope you enjoyed this video. Don't forget to like and subscribe, and join us in our socials at Telegram and Discord, where you can ask questions and provide your feedback. That's all for today. I'll see you on the next one.